Which is the best EV charging stock to buy? Blink Charging or ChargePoint? I'm going to answer that question in this video, comparing the two EV charging stocks across four different financial metrics, and I'll have the answer for you by the end of this video. You're not going to want to miss out. So let's get started. Looking at revenue growth for these two EV charging stocks, you see ChargePoint is well ahead of Blink Charging at 468 million in revenue over the trailing 12 months, while Blink Charging has 61 million in trailing 12-month revenue as of its most recent update. Blink Charging Management is targeting 105 million in revenue for their current fiscal year, so still growing very rapidly. In fact, each of these growth stocks are going to grow extremely rapidly over the next 2 decades, likely, as according to a report from Bloomberg, we're going to need roughly 400 million charging stations by the year 2040. And the latest estimates suggest that we only have something between 10 and 20 million charging stations right now. So we're going to need to grow from, let's say, a midpoint of 15 million charging stations right now to a midpoint of about 400 million charging stations over the next 15 to 17 years. So massive growth here that we're going to need, and undoubtedly Blink Charging and ChargePoint are going to benefit from that strong tailwind. The next metric I wanted to compare these two EV charging stocks on is cash flow from operations to sales. Now, I know these companies are going to be losing a lot of money on the bottom line and losing a lot of cash because they're going to be investing in research and development, investing in expanding capacity to roll out and to expand. It's still in the very early stages, but I want to see some progress, and thankfully I do see progress on both of these companies. Look at Blink Charging here. After reaching a bottom, they've been increasing their cash flow from operations all the way up to a loss of 134%, but that's significantly better than a loss of nearly 500% in 2019. So they're making progress. That's all I ask for these fast growing, innovative, cutting edge technology companies that have a long runway for growth. Show me progress. Show me that you're improving. And I clearly see that with Blink Charging, and I'm seeing that with ChargePoint as well. After hitting a bottom of negative 68%, they've shown improvement all the way up to negative 57%. So they are losing less than Blink Charging is in terms of their cash flow from operations to sales. They have a little bit of a different business model. Blink Charging is a little more, how should I say, variable in its business model, whereas ChargePoint is more, they sell their charging stations, and that's pretty much the only option buyers have. Whereas Blink Charging gives their buyers more options. They can buy the charging station, or they can have Blink Charging own and operate the charging station. So these different business models will require different levels of investment, and Blink Charging, their business model is more cash intensive, more fixed cost intensive, with more leverage as revenue grows. You should see more increases and improvement in profit margins over time based on their chosen business model. So that's something I will observe over the next several quarters and years with Blink Charging. Similarly, I wanted to look at the operating profit margin over the trailing 12 months. And again, I'm looking for the same thing here. I understand they're going to have negative operating margins. I understand they're going to be losing money on the bottom line. All I ask is to see progress, to see meaningful progress. And I do see that with both of these companies. Blink Charging improving from losses in excess of 300% in terms of operating margin, all the way down to negative 145%. So nice progress in terms of operating profit margin losses. And ChargePoint also showing improvement, and even better, less than half of the losses of Blink Charging, losing only 73% operating margin wise. So Each of them improving, making progress. Nice. That's all I asked to see. They've got a long runway for growth, so I understand they're going to be investing in expansion to roll out and meet this exponential market opportunity, right? So they're going to want to take advantage of that market opportunity. They're going to want to invest in growth. That's going to lead to losses in the near term, but hopefully lead to big profits down the line. So finally, I wanted to look at their valuation to compare these two. I looked at the forward price to sales ratio, and they're essentially selling at very close valuations. ChargePoint at a forward price to sales of 3.148, Blink Charging at 2.920. So after looking at all of the factors that I've looked at, looking at the valuation and looking at everything I've known based on all my research on these two EV charging stocks, if I had to pick one of these, I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. Charging stocks to buy right now. ChargePoint. ChargePoint would be my choice of best EV charging stock to buy right now. Although I will say that the more prudent strategy would be to just buy both of them. If you're bullish on the EV charging industry, and if you're bullish on the EV industry overall, and you think it's just going to experience massive growth, I think it would be more prudent to, let's say, if you were thinking about investing $100 and you're trying to pick which one of these two to invest $100 in, I would say the more prudent strategy would be to just split your $100 50-50 and buy $50 of ChargePoint and $50 of Blink Charging, because it's so early in the growth stage for these companies. You can't predict with a high confidence level which one of these two will be better off in the long run. It would be safer to split your investment in two and buy half and half of each of these companies, and hold them for the long term, right? Because they're going to grow until the year 2040 most likely. So hold them for the long term. Plan on holding these for several years. But if you had to pick one, ChargePoint would be the one I would pick, because more progress on profitability, smaller losses, which the less money that they're losing gives me more confidence that they're going to be able to scale up and survive long enough to capitalize on the rapid growth of the industry, right? But it's still too early, so I wouldn't say with very much confidence that it should be ChargePoint. No, I think it's pretty close, but if I had to pick one, I would pick ChargePoint. All right, as always, thank you so much for your viewership, and I've picked some videos that I think you will enjoy, so please click on one of those and I'll see you over there. Thank you for watching.